PMI data on China shows that the steam is coming off the economy. If we see China really starts to slow down below the government's forecast, what's going to be the knock-on effect for economies around the region and the world?
I think it's fairly significant, but slowdown again is a very qualitative, is a very ambiguous term. I mean, how significant is the slowdown? Is the growth going to a 4%? Is the growth at a 5.5%, 6%? And again, our sense is that private sector corporates in China are prepared for the slowdown. If you see over the last 4 years, private sector capex as a percentage of GDP was about an 18% number. That's come down to 14%. What has kept the economy going is again local governments, huge infrastructure binge, SOE going and spending, and we need a correction over there because credit to GDP is slightly at a worrisome level for the economy. So a bit of a slowdown for the economy is healthy, but can it be a controlled slowdown or not is a $1 million question, which is why you see a huge volatility or huge fluctuation in the market, because the first reaction of the market is that this slowdown cannot be controlled. And why this has happened is we've seen Shibor go to nearly 10% in the last 2-3 weeks as central banks not provided enough liquidity in the economy. So the fear is that whether this causes a bigger collateral damage or not. I mean, as we come out of it over the next 2-3 months, relatively unscathed for the Chinese economy, people will again look to fundamentals, realize that whole world is in a muddled through slow growth environment, and then pick up the relevant sectors for that.
So we can see a continued comfortable economy in China even with this slowdown in exports.
See, you cannot exactly call it comfortable. There are pressure points in the economy, but as investors, I think the onus is on us to find the specific sectors which are relatively doing well, which are relatively less impacted by these pressure points in the economy. So I think that's how we position our portfolios. You've got spaces in consumption where competition is limited. We've got places like Macau gaming which are relatively doing well, or we've got again clean energy plays in China which are doing well. So it's really finding those niches which are relatively insulated from these pressure points in the economy.
So in sum, you're not very concerned?
No, I'm concerned, but I'm not really outrightly bearish. I mean, our perspective is each of the countries, each of the industries, companies have their own set of issues. But at the same time, there are pockets which are doing well. Growth is not completely collapsing. So as investors, we just need to dig in a more deeper to find those specific points of comfort and hope that the policymakers do not make an error. See, if there is a big tail risk which comes, then clearly there's a huge collateral damage for the rest of the region. But the idea is that policymakers for the last 3-4 years have exhibited a fair bit of pragmatism, and it continues for some time.
What is your biggest worry about China's economy?
I think it's again the same thing that they keep throwing more credit at the economy and the economy fails to respond with the data. So we need to see these meaningful reforms on capital allocation coming in the economy. I think the earlier the government does, the better it is, because any which way people are faring the worst for the economy, valuations are low. So as we see more evidence of government doing the right thing for the economy, people will start to look beyond the hump and say that a lot of bad news is discounted, what do we do? So in terms of controlling the credit to the economy while ensuring that they are not large scale NPAs, things get managed well and growth doesn't completely collapse is something important.